Let's now turn to gold, back in focus, of course, given what's been going on in the fallout from that news in regards to both the United States and China backing off on their tariffs. Let's take a look at what's happening to the safe haven appeal of gold. Brian Chew joining us again from Australian Gold Fund. Brian, good to catch up with you again. We thought we'd get back in touch given we spoke to you last week prior to what we heard from the conference in Switzerland. Of course, markets were perhaps preparing for some announcement, but I think it has taken many by surprise, the fact that there is something solid there to go on, and we've obviously seen the effect it's had on risk assets. What's the result been, though, for gold?
Well, Andrew, it's good to be back. And I think it's interesting if you look at the past month since the Liberation Day, the markets have pretty much closed the gap that came up from the fears of what was going to happen to the global economy. And gold has done the reverse of what the market has done, falling from about 3,450 when it peaked in April back to about 32. Well, it's 32.60 at the moment. It was 32.25 earlier today. Which would have equaled to about 3.5% decline in gold. Now, is that the end of the gold bull market? All eyes should be on silver rather than gold in this case, because gold enjoyed the premium created by the market uncertainty, whereas silver talks about, what silver tells me is the decline in silver overnight after the news came out about the US and China trade talks. Silver only retreated by 1%. So in terms of the precious metals bull market, I think it's still holding strong. And that's why I wouldn't take this retreat overnight as calling it a day on the precious metals market.
So what are the key levels for both silver and gold that you'd be looking out for then?
Very good question. Now, if you look at the US dollar index, the US dollar index is now back above 100. It's about 102. I think it bottomed at about 98. Most people would look at the relationship which we discussed about the negative correlation between gold and the US dollar index. Whereas for me, I also consider the gold and the US dollar index and consider whether gold as the intrinsic value of gold, what that's like. In the last 2 years, the intrinsic value of gold actually continued rising and it moved up and down with the US dollar index. My view is if the US dollar index rises above 105, for example, then the price of gold should be back down to about 3,100. And if the US dollar index goes to about 108, if gold falls below 29.50, then that might actually sound an alarm. So I believe that we are back to pre-April levels. So anything goes from here. We are, again, as I said last week, all eyes should be on the Federal Reserve, what they're going to do in the next meeting, I believe, in middle of June, and that will give us further signals on what to expect. But at the moment, again, I wouldn't take short-term movements on gold and trade too closely with it. I know that some traders, that's what they like. For me, I look at the macroeconomy, and that is going to that's going to actually be quite telling in the next 2 to 3 months as to the impact of the trade talks and the tariffs and what to expect when the 90-day agreement between US and China and perhaps also the other countries, how that goes.
Yeah, I guess it's a question though too, what happens over the course of those 90 days? Anything you would think, given what's happened so far. Now, Brian, of course, those moves in gold have been accentuated by the gold stocks. You take a look, some very large falls today, particularly among those mid-tier miners.
Yes, in fact, the last month we had three big single day moves down for the ASX Gold Index, and today is probably the second biggest drop in the past month and a bit. And if you look at the gold stocks themselves, the producers are down quite heavily because, as I said last week, the larger producers were generously valued even though their operating margins are looking as good as it can be since I've tracked this for the past 12 years. Now, the operating margins, as in the difference between how much they sell their gold for relative to their all-in sustaining costs, the production costs, I expect them to continue to be very strong for the June quarter, given that the gold to oil ratio, as in how many barrels of oil 1 ounce of gold could buy, is currently still at about 52. We haven't seen these levels since 2020. And when that happened back in 2020, the gold stocks, the producers were delivering very strong cash surpluses. It's been the same in the last 3 quarters. I did say last week that the March quarter was slightly disappointing compared to what I expected. So that's why I think the market has pulled back, because gold has lost the premium on the market uncertainty. Whereas in the longer term, I believe this dip brings some of the producers back into play, at least in my view. I am no longer as looking to take more profits at these levels, but rather may even consider buying some of the lagging producers. And once again, the companies that I'm most interested in are in the developers and some of the late stage explorers, because those are catching up.
All right, so you do see a buying opportunity there, but you're saying in those lagging producers, but also perhaps tempted down into the explorer area.
Yeah, that's right. Yep. If you look at what happened last week, since the last week, I mentioned Barton Gold Holdings, and Barton Gold Holdings rose to as high as 71 cents yesterday. And even with today's pullback, it's trading at about 62, 63 cents. There is also Rox Resources pulled back below 30 cents from the capital raising that they had a $40 million placement at 30 cents, and is trading about 27, 28 cents. Southern Cross Gold Consolidated is still above $5. And you could see there are several of these developers that are just coming up as certain funds and also investors rotating from the producers to look for value in the developer side of things.
Brian, good to check in again what you're seeing in the gold space. Thanks for joining us from Australian Gold Fund.
Yeah, thanks very much, Andrew, and God bless.
Thank you for watching my interview with Ausbiz. To learn more about our work, visit the Australian Gold Fund website. Also, check out Gold Hub Australia for live precious metals price quotes and insights. You can also sign up for our regular updates. And don't forget to visit the Ausbiz website. All our links are in the description. Please leave your comments and thoughts on where gold, silver, and the US dollar are heading below. Thank you very much. God bless.